Yes, hello guys. Okay, so today I'm going to be taking you on Forex 101, all right, beginner's guide. We're going to be looking extensively to into Forex, all right. So Forex 101, all right. This is more of beginner's guide, right? So we'll start from introduction to Forex, intro to Forex. Now, in this class, I'm going to continue the explanation, all right. I'm going to share my screen and then I'm going to be looking extensively. It's going to be a very long one. All right. After this course, I think you should be used to most of the terms and understand, you know, what Forex is all about. Okay, so we'll be starting from introduction to Forex. What is Forex? All right. People keep asking me what is Forex trading and the rest. So I'm going to be unveiling that. All right. Now, so what is Forex trading? Forex trading is simply, the word Forex comes from foreign exchange, all right? Foreign exchange, right? It's simply the exchange of, currencies, the buying and selling of currencies, right? The value of currencies, the buying and selling of the value of currencies, right? The exchange, all right? So that is what Forex trading is all about, all right? We make the next is how do we make money, trading Forex? We simply make money by buying low and selling high. All right, when it's low we buy low, we sell high. All right, so if the chart looks like this, all right, the price of each currency keep going up, down, up, down, up, down. So we predict the value. All right, we forecast. So if we are buying low and the market keep going high, all right, like this, we are making our money, right? The more it pushes high, simply because we bought low, we're selling here, so we are making that money. And we make this money by simply analyzing the chart and clicking buy or sell. Right, so is Forex trading a gamble? No, it's not a gamble, because the market can be analyzed and you can have a trading edge. Forex trading is a business. All right, it's a business. You have a broker and the rest. That explains that. All right, so that is how we make money. All right, once you click on buy and the market goes in your direction, all right, or you click on sell, the market start going down, you make the money. You make the money. You are predicting the value of the currencies. Banks trade Forex, all right? Institutions trade Forex. These are people that engages in the, we are retailers, all right? We are retail traders. We go in with our little money to make money off the market. So that's what Forex trading is all about, all right? So we're going to look briefly into, you know, understanding certain terms in Forex trading, all right? So just like I said, Forex trading has to do it. All right, so this is beginner's guide, please. All right, so Forex 101. We're going to now be looking at some terminology, right? Terms in Forex. So you won't get confused when you start hearing some terms, right? And I'll share my screen and also teach you some things you need to see practically. So we'll start with currency pairs, all right? So what are currency pairs? Currency pairs. Now, we trade currency pairs in the Forex market, right? We trade currency pairs and they are usually paired together, right? So for example, we can have Euro USD. Euro is, you can see that EUR USD, all right? So here is the base currency and then this is the quote. That's how I leave it, right? This is the base, this is the quote. Simply means you are buying this to sell this. You understand? It's usually paired like this. Okay, you are checking the value of this to this. All right, you are transacting, you're either buying or selling. Okay, you're either clicking buy or sell to make money off this. So we have Euro USD, we have GBP USD, all right, we have USD card, all right, we have USD JPY Japanese yen, Canadian dollars, United States dollars, Great British pounds, euro. So those are the currency pair. We have other ones. Okay, NZD USD, New Zealand dollar, NZD USD. We have, CAD CHF. All right. So we have a lot of currency pair, but the idea here is that we pair it. They are being paired in the market in such a way that you either click on buy or sell. With your phone, you click on buy or sell to make money. Right? When you click buy, it simply means you are getting this to get this. You understand? You are buying one to sell one. All right. So it is called currency pairs. Those are the currency pairs we have, and they are paired together. All right. So another terminology we're going to be looking at in another term is MT4, MT5. Right? MT4. What is MT4? Right? Or MT5? All right. Those are platform we trade. All right. Terminals we trade. All right. This is MT4, this is MT5. There are terminals we use to trade. This is we implement trades from here. All right. Some people do the analysis also from any of these. I prefer using MT4. All right. Some people like MT5. This is just a modification of this. All right. And then I think the next we have here is trading view. All right. Trading view. All right. Those are, you must be using these parameters. Like me, I do analysis from trading view, then I implement on my MT4. You can decide to use MT4 or MT5. All right. So those are platforms for trading. All right. Those are platforms for trading. And then the people also implement from trading view, but I use trading view for analysis. It is more better for me. Because you can see your position tools and a lot of things in trading view. So I do my analysis from trading view, then implement in my MT4 or MT5. All right. So you'll be needing this. Just go to your Play Store. You can download this from your Play Store. All right, and then this you can also download it, but I prefer using the site. So you can go to tradingview.com and sign up for free. So now let's go to, what are pips? Let's go to pips now. All right, pips. All right, people call it percentage or people call it percentage in points. Some say percentage in profit or something. All right, so it is the measure, all right, of the movement of price, just as time is measured in seconds or in minutes, right? The movement of, price in the chart from one point to another can be measured in pips. All right, we measure the movement of price in pips. So if the price of, let's say, USD Euro USD 1.2345, all right, if we have it like this, all right, 6, okay, all right, we look at this, all right, 1.23456, all right, to this point here, all right, becomes the peak. If this now changes to, okay, 1.2356 and then 1.23, we have 4, all right, and then we have 4, we have, let me check something. All right, sorry about that. So when you have 1.23, let me just have a clear. So if we have 1.2456 here, we have 1.24, 61. All right, 6 all right, let's say 5, 6, and then this is 2, 2. All right, we'll check it on the 4th decimal places here. This value here, if this changes from 6, right, to 7 here, it has added 1 pip. All right, if this changes from 6 to 7, it has added 1 pip. All right, and then if it reduces like 1.2455, so like this. Now this value, the 4th decimal, you get it right. This one is called pipette. All right, this value have to count to 10 to affect this. All right, if this count 2, 3, 4, 5, 6, 7, 8, 9, 10, this will change to 8 like that. So that's how it keep going progressively. But there are some currency pairs like JPY, all right, where you can see 124.68 3, right? In such cases, you check here. Here becomes the pip. The value here becomes the pip. This is where you pay attention to most of the time. So when you see 1.124.673, this movement from 7 to 8 has added 1 pip. 8 to 9, that is 683. That's 124.693. Now it has added 1. You can see progressively 7, 8, 9. So that's the increment. You can see here 5, 6, 7. All right. So here in currency pair, where you see 1, 2, 3, 4, 5, like that. 1.12345 you see it lengthy. Like just check the fourth value here. All right, the count 1, 2, 3, 4 here becomes the value you pay attention to. So the pip, all right, is the movement of this value here. If this changes to 8, now it has added 1 more pip. All right, so this is the pipette. All right, this has to count up to 10 before it will affect this value here. So that is what pip is. So as it moves in 1 pip, you see candlestick increasing, right, in size and keep moving in the direction, so that's that about pip, percentage in point. All right, shows how the movement, calculate the movement of the price. All right, calculate the movement of price. Now what else? Lot size. Okay, lot size. Lot size is another term used in forex trading here. Is called lot sizes. What is lot sizes? The amount of share you decide to buy. If, thank God, you understand what pip is now. If in 5 pips, if we have 5 pips, all right, somebody like, let's say Dangote, all right, the richest man here, like let's say he with his wealth, if I'm trying to buy a currency pair, let's say I want to buy Euro USD. All right, I want to click on buy. With my little capital, I may say, okay, since I have, like, let's say I have $5,000, I may decide to say, okay, I want to buy this with a lot size. All right, so if I buy this thing, Dangote can also buy this. All right, Dangote can buy this, all right, with his money. All right, we will have the same amount of pip, but he will earn more than me. If I said I want 1 pip to be equals to $10. All right, if I say I want my 1 pip to be equal to one of my pips should be $1. It simply means in these 5 pips, I've made $1 times 5, which is equal to $5. All right. Aliko Dangote may say, let one of his pip be $10. You understand? It depends on how much you want to stake in a trade. He may decide to say, okay, let one of his pip be equal to $10, which means 10 times the 5 pips. He has made how much? $50. When I'm making $5, he is making $50. So lot size has to do with the amount, all right, the amount you want to stake in a trade. All right. So like, let's go now. I think we have standard lot size, we have mini lot size, we have micro lot size. Okay, we have standard lot size, we have mini, then we have micro lots. So in standard lot size here, okay, which is 1.00 like this, 1.00 here like this, simply means 1 pip. All right, it simply means 1 pip. Let me write this way, right? In standard lot size here, 1 pip, we can just say 1.00, okay, where 1 pip, all right, is equals to $10. So a movement of 1 pip, it simply means you are controlling 100,000 units, all right, of that currency. All right, you are controlling 100,000 units of it. So here, what you need to just understand about the standard lot size here is that 1 pip movement is equal to $1. Just if you say 1 pip, right? Now, if you change this value, this 1.00 here, now if you change this value to 2 now, it becomes 20 pip. All right, because 1 pip is equals to 20. So if you now change this 20 to 30 to 3, now if you change this 2 now to 3 now, it becomes that 1 pip becomes $30. All right, 1 pip becomes $30. If you change this figure here now to 4, So I'm just trying to break it down so that you understand what I'm saying. That if you decide to buy the lot size like 4.00, you are trying to say that let one peak movement be $40. There are people that have that kind of account. All right, we are getting there too. All right, if you change this to $5, you see the way I'm changing the value and it's affecting the amount per pip. So this becomes $50 per pip, and and so on. Do you get that? And because we are moving this figure here and it is a standard lot size. All right, so now here, so let's just use the normal one. 1.00 here means $1, 1 pip equals to what? $10. So all right, that's the normal. Now the mini lot size here simply means you are controlling 10,000 units of that currency, which means that which means that you will see the space of lot size. Like normally when you get to MT4, you see 0.00. Okay, so I'm trying to tell you now that if you change the first zero here to 1, you are saying that let 1 pip be $10. Right now, let the movement of 1 pip be $10, which means if you have like 5 pips now, you are trying to say that $10 times 5, that is, as it's moving in your position, you're going to be winning $10 per pip. But if you're also losing, you also be losing $10 per pip. Do you get that now? So that's it, that about that. And so when we get to mini lot size, it simply means 0. All right, these are you write it 0.10 here. So this is the arrangement. You can see here at standard lot size we change here, right? At mini lot size now. So let's watch here. Okay, we are using this now. For this now. So here is 0.10, which means 1 pip, all right, is equal to $1. This is a sign of dollar I'm trying to write, please. All right, let me write it well. $1, which means if I have 5 pips now, that's going to be $5, right? As it's moving. But if you can also change this to 2. Once you change this to 2, simply means 1 pip is now $2. Just as I say, the same thing applicable here, right? When you change this 2 to 3, you are saying that let 1 pip, let 1 pip be 30. Let 1 pip be $3. Do you get that now? Let your 1 pip be $3. That's what you're trying to say. If you change it to 5, that's 0.50. You are saying that let your 1 pip be $5. Are you getting it now? Let your 1 pip be $5. So you can change it up to 9. Now, if it now move from 9, it becomes a standard lot size. The next to it now is 10, which is standard lot size. You get that now? It's as simple as that. So when you go to micro, it's the same thing, your lot size. Don't worry, there is a site for calculating your lot size that I'm going to show you, babypips.com, okay? So that if you don't have to stress your brain, if you don't know it, but it's important, it's expedient to understand all this as a Forex trader. So here was 0.01. So when you change the value of this side, it's a micro lot size, which means here, 1 pip is equals to 10 cents. 10 cents, all right? It's not even up to dollar, that's 10 cents, all right? 10 cents, we have, it is 100 cents that makes $1. So yes, if you increase this now to 5 now, all right, you are saying that you want $1 to be 50 cents. All right, 50 cents. You exchange it to 2. If you reduce it to 2, you are saying let $1 be 20 cents. Do you get that? Like that, like that, like that. So here is also for this. So here 1 pip here is 10 cents. We need 100 cents to be to give you $1. So you can see it depends on how much you want to stake. So that's what lot size is all about. All right, so you must know your position sizing. That's the essence of understanding lot size, so that you know how much, when we get into risk management proper, you understand the use of lot size and how to do that accurately. Okay, so that's what lot size is all about, the amount you want to stake in accordance to your to your account balance. All right, you don't throw up your risk anyhow without knowing what you are risking actually. So that's the essence of lot size. Now let's go to what is called risk to reward. Okay, risk to reward. So you'll be hearing things like risk to reward, risk to reward, risk to reward. What is risk to reward? In Forex trading, there is what is called risk and there's what is called reward. We are trying to give out our money. We are trying to give out our money because you risk with your money with the intention of gaining. Do you get that now? So we are trying to give out our money to see how much we can make on it. So it's called risk to reward, right? The risk is the amount you are ready to expose. The reward is the amount you are going to get in return for that. So, for example, if you see an opportunity, you can decide to risk. You can decide to, like, for example, I can risk $10 to get how much? $20. When I risk $10 to get 20, this is a risk reward of 1:2, which means I'm risking one to get two. Do you get that? When I risk 20 to get 40, it's still the same thing as 1:2. Are you with me now? So when I say risk reward of 1:2, but we also have a risk reward of 1:3, which means I'm risking one to get three. Like I'm risking $20 with the intention of making how much? $60. There is also a risk reward like that. All right. That is, I'm risking $10, all right, to get how much? To get $30. The aim in forex trading is not to win in all trade, but it's not to win in all trade, but let your risk to reward be good. Like if you are losing, lose less. If you are winning, you gain more. So with a risk to reward of 1:3, even if you have 30% win rate, you are still in profit, because anytime you are winning three times of what you are risking. Do you understand? So it's called risk to reward. All right. That is why in there is a tool called position sizing. All right. In the trading view we'll be using, it has something like this. All right, then this side is going to be more of a red zone, that is for a buy scenario, right? So when here is two times, when you draw this side to be two times here, it becomes a risk reward of 1:2. In the kingdom web strategy, we use the risk reward of 1:2 fixed. All right, so this side becomes the risk, while here is the reward. So you can now see that this side is two times this, right? We measure it, project our trade, and for a sell scenario, you can have something like this where the risk is at the top, the reward is under, so that if the market keeps coming in your direction, your reward is two times your risk, right? That is, if you are losing this area, you're losing 1% of your account, but if you're earning 2% of your account. Do you get that now? It's just like you're risking $50 to make $100. So that's it. We have risk to reward of 1:5, where you are risking $100 to make $500. You're risking $10 to make $50. All right, so that is what risk to reward is all about. So let's go to stop loss and take profit. What is stop loss? When you hear something like stop loss, all right, here take profit. All right, you'll be hearing things like this. So there's every need I explain all those things to you. When I get to the chart, I'll still show you guys. Okay, stop loss is the amount, or the the point in the chart where you agree that, okay, you are willing to lose this amount. All right, your stop loss is the period, all right, or the point on the chart where you agree that, okay, for example, let me illustrate this now. Okay, if price comes to this point, I accept that I'm wrong, right? Because you can never be right all the time. So stop loss is the point where you agree that, okay, get me out of this trade. I think the aim of stop loss is to protect your capital, because you know very well that you can never be 100% right. So if this chart is going up like this, right, and it comes to this point, for a buy scenario, your stop loss should be under. For a sell scenario, your stop loss will be at the top. Do you get that now? Because when you buy, you are hoping that the price goes up. So when you enter a trade here, let's say you enter the trade here and they break out of here, you enter a trade here, you put your stop loss under. All right, put your stop loss under anywhere you want to put it. Then your take profit at the top. Take, for example, 1:2 risk to reward. Here becomes what? Times 2 of here. So here becomes your stop loss, where you put it to protect your account in such a way that if this market decides to return back, all right, to this side, it will get you off from this point. It will get you off from this point. So your stop loss now protects your capital for you, that, okay, because this young man, you can set your stop loss and leave the market. All right, that is your stop loss, in such a way that even if you are not in the market, it will just cut you off the trade, instead of you losing the whole of your account downward like this. Do you get that now? So stop loss is a provision made to avoid risk, to minimize risk. Rather, you can't avoid risk, but to minimize risk. So that's that about stop loss. In the same vein, there's what is called take profit. Right, take profit is the point. All right, you agree that, okay, this is because in the market, if you don't know what you're looking for, the market would even take what you have in your hands. So if the market is going up like this, right? You are for a buy scenario. I'm only looking at for a buy scenario, for example now, and you enter your trade here, right? You put your stop loss here already. There's every need to know at what length would you want to say, okay, I'm done. All right. If you want to, you can buy a shoe for 100 naira, all right. For example, you go for $100 and then you decide to sell it, or $200. All right. So that $200 becomes your take profit. So at what point will it get to before you say, okay, I want to get out of this market here? It becomes your take profit. So you can set your stop loss, take profit, and leave the market. If it hits your take profit, your money will be saved and added to your account balance, right? To be added to your balance for even when you are not on. So once you just hit your take profit, you will see there will be an increment in your balance. All right. If it hits just the same thing as if it hits your stop loss here, there will be a loss at the minimal rate. Okay. Here too, if it gets here, all right, before even returning, you have already captured your money. Right. And if it gets here and keep going up, that's not your business. You already have a specific, you know, reward. You've already set your reward you want, and there's every need to be setting your reward so that you know what your reward will be. You know what win rate you have. You know how to control your, because it is greed to just leave your profit going up like that, because the market only trend 30% of the time, right? 70% of the time it doesn't move in a trendy manner. So that's that about stop loss and take profit. So stop loss is a provision made to minimize your loss, and take profit is at what point do you want to take your profit, at what point do you want to take your reward and leave the market. So let's go next. I think we'll go into indicators. What are indicators? Okay, indicators. We'll go into indicators. What are indicators? Indicators are technical parameters on the chart to help us. For example, we have the moving average, we have stochastic, RSI, all those things are what they are indicators. You use it to facilitate your analysis. You need to support your analysis. People trade based on indicators. All right. So indicators are there. For example, we have the moving average. All right. We have the moving average. We have Bollinger Bands. Bollinger Bands. We have RSI, MACD, and the rest. So those are all indicators, all right, technical parameters to help you analyze the market. All right, they have their own functions. All right, so let's move very quickly to a broker. A broker is like your bank where you enter your transaction from. We have a lot of broker. All right, we have a lot of broker. It's like your bank where you enter your transaction from. All right, there are a lot of broker. All right, we look for regulated broker and trade with them. So that's it about that. Now let's look at time frame in trading. Time frames in trading, right? Time frames. Look at what time frames. Time frames in trading. Now, once you look at your chart at the top of trading view, you will see 1M, you see 5M, you see 15M, you can see 1H, you see 4H, you see daily D1, WM, like that. So this is 1 minute. Once you click on this, it's 1 minute, which means that candle is giving you information of just 1 minute. All right. So after 1 minute, another candle sticker count for 1 minute again. So when you put it at 1 minute, it's giving you information of 1 minute, per candle. Once you also put it at 5 minutes, the lifespan of that candlestick, right, is going to last for just 5 minutes. Right, are we getting it now? So that candlestick will only count for 5 minutes, then another 5 minutes start counting again. Another candlestick come up for 5 minutes like that. The same thing for 15 minutes, 1 hour as well. The candle will last for 1 hour. 4 hours, the candle will last for 4 hours before another 4-hour candle start counting again. Give you information of the candlestick per 4 hours. Daily as well, one candle representing 1 day, which means for that 1 day, it simply means that what you'll be seeing at the chart, one candle represent 1 day, right? Which is the price action, whatever has happened in that candle for that 1 day, right? Weekly time frame as well, one candle represent weekly, right? When you click on weekly time frame, monthly, like that, and yearly, and the rest, right? So that is that about time frame. It's important you know time frame because of top-down analysis and what you use to do your proper analysis. Now let's look at trading sessions. I'm going to be talking briefly on trading session, right? Trading session. Now for our Kingdom West strategy, we use on the pre-London, and we'll trade majorly the pre-London and the London session. All right. So we have like I think like four major we have the New York session, we have the London session. All right, we have the New York. All right, we have the Tokyo session. All right, we have Sydney and the rest. All right, we have the Sydney, you know, we have pre-London before them. All right, there is a point at which the New York collides with the London session. I think that would be around 1 p.m. Nigeria time, right, to around 3 p.m. or 4 p.m. thereabout. All right. So, but we don't trade in that time because it's too volatile at that time, and a lot of news. So we only trade the pre-London and London session for our strategy. So that's that about trading sessions. All right. Trading session, you need to understand trading session because there are certain currency pairs that are more active in certain sessions. All right, like the Japanese yen, and most of them, the JPY currency pair, you check, the Tokyo session is very active there as well, depending on the currency, all right, depending on the country that is making use of it as at that time. So let's look at what next. Back testing. When you hear of something like back testing, guys, back testing, you'll be hearing something like back testing, back testing, back testing, and then front testing. You're gonna call front testing now, all right. Back testing is to scroll past previous information, previous data, checking it in line with your strategy to see what has happened in the past, all right. It is said that whatever has happened in the past can also repeat itself. So back testing has to do with going back to check the information in line with your strategy, if that's what you're looking for. And for front testing, you are taking it live, all right. You are doing it forward now. You're no longer going back, but at the time it shows up, you take the trade. Do you get that now, guys? Yeah, you take the trade to see, to confirm, what the back testing is telling you, because most times as well, whatever happened in the past may not repeat itself, may not. So you want to check the authenticity of those information that was supplied, in your back testing, if it's actually real. So now let's just go to support and resistance. We are going a little bit technical now, right? But I think we're going to be ending it there. Support and resistance. Support, okay, and resistance. You'll be hearing something like support, you'll be hearing resistance, all right, most of the time. Now, in a Forex chart, the point that reverses, the force that reverses a chart movement or a price movement to the upward direction is support. So all those points are support, all right. The point of reversal to the upside, you can put a line, people put line all through it, all right, they are called support. In the contrary as well, the point that reverses it downwards are called resistance. Those points, all right, that hits it downward are called what? Resistance. So this is resistance, those are what? Support. Okay, it's very important you know this thing, all right. They also call it demand and supply, okay, but they say there's also a slight difference between demand and supply, and the rest, and support and resistance. So I think that's that about that. I think we'll get into the chart, and then I will show you other things you need to know. All right, I'm going to be showing you other things you are going to know. And then know that in trading we risk in percentage. All right, we risk money in percentage, not just and then let me see prop firms. All right, let's look at prop firms. Prop firms are financial organization that offers you capital. You pay a token, offers you capital to pass the evaluation phase, and then gives you capital to trade. All right, gives you capital to trade. So I think this information are what you need to know for starting. All right, for starting. All right. So we're going to head to the chart, and then I'll show you some of those things so that you can get to understand it more. See you. All right, guys. So this is it. All right. This is a continuation from where we started from. As you can see, this is the environment of trading view. Okay, this is where we do our analysis from. You can see the tools at the left hand side here. Okay, we'll come here to pick a long or short term tool. If you want to go long to plan your trade, you can see this is what I was saying.
All right, if you want to go long, see this is where you check your risk to reward, or you arrange your risk to reward. If you want to go short, come here as well. You can see there's a short position to here, you set it as well. All right, you make sure that the green is 2 times the red. This is where we do all our planning from trading view. Okay, that was trying to show you. And then let me show you the environment of the, you can see this is MT4. All right, and then this is MT5. All right, those are all platforms, terminals we trade from. All right, MT4, MT5. This is how the MT4 look like. All right, this MT4. It has so many currency pair here now, and if you want to add any currency pair, you see this plus sign, you click on this plus sign, you can now set, like, let's say GBP, AUD, USD or something, AUD, USD. The moment you type it, okay, it's not showing up here because it has already been added. You can say AUD, GBP, AUD, JPY or so. Okay, let's just look for a currency that is not there. If you want to add, that's just where you add from, and then you see it appear here. Okay, so this is for MT4. Let's go to MT5. Okay, we go to MT5. This the MT5 platform, almost the same as, so just a little modification. All right, this is where you check, um see your quotes, all your currency pair also here. You search from here as well. You want to take a trade, guys, you see up here, you see buy, here you see sell. You want to take a trade, you can come here. All right, this is how to take a trading. You can click on AUD, you can see USDGP, right? You can see new order, click on new order. Now this side is where you put your stop loss I was talking about. All right, this side is where you put your take profit I was talking about. There are values you just need to attach there, that's all. All right, there are values you just, then this is your lot size here. As you can see, this is your lot size. What I was explaining now, 1.0 here now, I was trying to explain, is your standard lot, which means 1 pip is going to cost you, 1 pip movement is going to cost you $10 here. Do you get that now? Now if you change it like this, it simply means what? Is $9. This is what? A mini lot. Okay, all right, a micro lot. So it's going to cost you $9 here. If you change let's say you change it to one, now it simply means $1. Do you get that? If you change it to 10 like this, simply means $100 per 1 pip. That's 10.00, right? 10.0, that's it. Okay, it simply means $100 like that for 1 pip. So that's just where you set it up. From here you put your stop loss here. How do you set your stop loss? Let's say, for example, we're looking at GBP USD. All right, we'll go to open chart. All right, okay, this is for what? This is MT4, MT5. Okay, let's go to MT5. All right, this is MT5, guys. So 1.00. So let's just assume this is the standard lot. You want to go in for a sell now, you need to set your stop loss. Some people click on sell first. For example, click on sell. Now this simply means one movement. You see what's going on, right? I'm just showing you this on a demo account. All right, here means you can see they say an order has been placed. Here means one, you can see the way it's moving, the money is, we are in a loss of $20 because this thing is moving 1 pip for $100. So you need to calculate 1 pip here for $10. You need to calculate, because you can see the root USD JPY sell 1.0. It simply means one of your pip movement there is what? Is $10. Do you have that kind of money to do that kind of transaction? All right, so you need to calculate your position sizing. All right, now if you want to do any modification, you can swipe to the left, you click on this pencil side here, you put your stop loss here. Now how do you put your stop loss, guys? Look at it now. For example, you want to put your stop loss at this 1 point, look at somewhere here. All right, 1.2810, 1.2810, guys, 1.2810. You can decide to say, okay, you come here, you go to your trade here, you scroll left, 1.2810, just come here and type it, 1.2810. all right, I think we didn't insert it well. Let's go and check. All right, 1 point, let's just look for a stop loss. Since we sold, our stop loss is going to be at the top, right? So 1 point, let me just put 23,840, 1.23840, 1.23840, 1.23840. Whoosh, what's going on? Let me just look for stop loss at the top here. 23,890. Let me see your stop loss. I'm just guessing this, all right. I'm not trying to, we are not taking any trade. I'm just showing you how to put the stop loss here. Okay, your stop loss is going to be above, all right. For example, we have 1.23840 is a good place. Once you just type it there, I think that should be a network or something doing something. 1.23840, that should be network doing something. Your stop loss is here, all right. Then your take profit should be at the right hand side here, all right. So your take profit now is going to be a down, it's going to be down, all right. Are we there now? So it's as simple as this. This is for MT5. Okay, this is for MT5. MT4 is the same thing. You set your stop loss like that as well, and your take profit. So for example, let's go to MT4. You see, okay, let's just go and see. We'll take a trade. This is somebody's prop firm here. Okay, let's check here. All right, this is MT4. All right, see guys, let's say this is, as you can see, this USD, Euro USD, right? Let's wait for this chart to load. I want to show you how to insert you know your stop loss, take profit. Let's go to CAD open chart. This plus sign at the top here is where you can also add. I think network is has just been disturbing. All right, all that was network, but well, I've showed you. You just need to insert it there, right? You just to type the figure there, all right? Just to type the figure, and then you make some money off it. All right, guys. So let's proceed. As you can see, this green thing, you see, this blue purple line, and the orange line, you see, those are all indicators. When we go to the environment of trading view here, you can see this line you see under here is called ATR. They are all indicators. That's what I was trying to explain to you. All right, and then a broker is the place you saw me just trading from. All right, we have Quaco Market, a lot of brokers there. Now, and I was teaching you support and resistance, guys. This is support. All these points here are support. I say the point, the reversal point from under here, the forces that turns it from under to the, reverse it below to the top here is called support. All those forces are support. The resistance is the opposite. Those forces that push price down is a resistance. All right, this is a resistance. What happened here that push it down? This is a resistance. All right, and those ones pushing it below upwards as forces of support. All right, so that's that about that. I think we still talked about back testing. Back testing is an act of going back, to ascertain data, checking what has happened in the past. You can scroll back like this, checking what has happened in the past, your risk to reward. I've explained to you. You can use your position to here to ascertain your risk to reward, just to place it where you want to take the trade, whether for a buy or for a sell. At the entry, the green side is for your reward, the red side is for your risk. Okay, so that's that about. And then your stop loss is the price, the point you put the price. You can see this for these two here now. All right, if I'm to pick a line here now, horizontal line, and place it here now, look at it, look at the line. All right, it gave me what? It gave me a value 1.23906. That's where I'll just type as my stop loss. So if price comes there, if I'm selling, the price gets to that side, I'm not in the market, it's going to take me off the market. That's all. All right, going to take me off the market, the percentage of risk. That is it about that. Okay, so guys, that's for stop loss. And for take profit as well, you can see if I place the line here at this my reward side, all right, which is the take profit level, it has a value attached to it, 1.23753. So that's going to be the value I'm going to input on my take profit area. All right, my take profit area. I told you guys, I think I've explained it. All right, I've explained it here. All right, so if you click on a cell, like this, guys, it has a place you can insert your. All right, this was the trade we took. I'll show you. This is for your stop loss, and then this is for your take profit. Those are where to insert it, and then this other side at the middle. All right, there is a point that if you want to do the correction of the, I think that will be here. Those sides you see at the middle, that 1.00 is where you you put the value of your stop, of your lot size. So that's that about that, guys. So Forex is simple. All right, the time frame I'm talking about, once you click like this, if you go to the chart and you click like this, you can see 1M, 5M, 15M, 1H, 4H. Those are the time frames. So when I click on 1M now, one of these candles represent 1 minute. So it will keep pushing for 1 minute. Do you get that? It will keep pushing for 1 minute. The next minute will come like that, like that. All right. So you need to know how this works. So that's that about that, guys. Also, same thing on trading view. When you go to trading view, you see the time frame at the top. You see the time frame at the top. So that's that about that, guys. See you in the next